Hey, welcome back. So, just like everyone else on YouTube right now, I'm going to create a stock market challenge series. And what I intend to do is start with $25,000. And what I want to do is I want to run what's called the wheel strategy on stock options. So, right now this is Robinhood. And what you want to make sure is if you want to follow along, and again, this is not financial advice, this is just for entertainment purposes only. You can follow along and just paper trade if you like. But you want to have this options setting toggled on. And if you don't have it activated, you're going to have to go to account and then your settings page. You'll have to answer a few questions to make sure you get permission or approved to trade options. And then once you get approved, you should have this option to trade right here. So a couple things that you want to make sure when you're trading options is you want to pick a good stock, in that you want to make sure the stock has a high volume. So if you look at SPY, which is a very popular stock to trade options on, and it tracks the S&P 500, it has a volume of almost 230 million on average. If you look at other stocks like Facebook or Apple, yes, they're good stocks, but if you look at their volume, it's not nearly as much. Facebook has a volume of 29 million on average. Another good stock that people trade options on is Q, which tracks the NASDAQ 100. And that has a pretty high volume as well of 73 million. But again, nothing is as high as SPY, so that's what I'm going to choose. The other thing you have to want to look for when you pick a stock to trade options on, especially if you want to do the wheel strategy, is that it has to have a lot of option dates. So SPY has options 3 days a week, whereas other stocks may only have it once a week or maybe even once a month only. So I like SPY because it gives you a lot of options in terms of which expiration dates you want to pick, and also because it's very, very heavily traded. So if you're not familiar with the wheel strategy, it only involves selling calls and selling puts. So we never want to buy calls or buy puts using this strategy. And when you sell calls and puts, time is on your side, because as the time to the expiration date decreases, there's just a higher likelihood that you're going to collect on your premium and not get assigned shares or get your shares taken away from you. So that's what, quote unquote, the Theta Gang is all about. So if you want to start the strategy, first you want to pick a stock, and like I said, I'm going to pick SPY, so feel free to follow along. But again, everything is at your own risk. This is not financial advice, and I'm not telling you what you should do. This is just for entertainment purposes only. But today is April 8th. It's about 1:30 p.m. The stock market is open right now. And let's just say, since this is day 0 of the challenge, I'm going to pick SPY. And to start the wheel strategy, the first thing you're going to do is sell a put. So we're going to click sell, we're going to click put. And this is Robinhood, and right now when you click sell put, everything turned red. And that's because SPY has been going up steadily all day long. So these premiums for selling puts have gone down. You can see these percent changes there, 50 to 70%. These values have gone down. So one of the first things you want to look at when you're trying to pick which strike price after you picked your expiration date is what I like to look at is the chance of profit. So this assumes that everything is a normal distribution or a bell curve. So what this is saying is that, let's say I were to think about purchasing or at least selling the put at a $268 strike price. Assuming a normal distribution, this is saying I have about a 72% chance of profiting, meaning I will collect $2.12 if I bought this right now per share. And when you buy an option, you buy or sell a contract, and one contract is 100 shares regardless. So that means if I were to sell this put right now, I could collect $214 immediately, and that's mine to keep no matter what happens. And if by the end of day tomorrow, which is April 9th, if SPY does not get to 268 or lower, then I get to keep this premium and nothing else happens. I don't get assigned any shares. However, let's say tomorrow SPY just plummets and goes all the way down to 260. Well, I'm going to end up paying $26,800, right? Because it's $268 per share times 100 shares. And I'm going to get assigned 100 shares of SPY at $268 each. So basically, if this SPY stock plummets, I need to make sure I have $26,800 in my account. And that way, I can buy the 100 shares that I was obligated to buy. But I still would get to keep my premium. So that's the risk of selling puts initially. But I'm not afraid, because if I do get assigned those shares, then I'll just sell covered calls on them to keep making premium. And then eventually that will probably get called away from me at some point. But because I said I'm going to start with 25,000, I need to pick the strike price of, at minimum, $250, right? Because if I get assigned these shares, $250 per share times 100 shares is my 25,000. If I pick the strike price higher than that, well, then I wouldn't have the money to buy those shares, and I'd be in trouble. So as you can see, because SPY has gone up so darn much the past couple of days, it's gone up. There's a $20 difference between 250 and 270 that is trading at right now. So my chance of profit is incredibly high, right? 98%. And because this is low risk, it's low reward as well. I would only get $6 by trading this, by selling this put. So, right now it's $7. So right now, because that's my max in my account right now, what I can do is I can switch over to triple Q and see what that's trading at, because I think it's a little bit cheaper. Right, so triple Q is only $198 right now. So we're going to do the same thing. And if you look at, so we're going to sell put. And you can see triple Q only trades weekly, right? April 9, April 17, April 24. Whereas if I go back to SPY and look at its expiration date, so that's not SPY. Trade options. SPY trades almost every 2 or 3 days, right? So that's why I like SPY, because there's so many options. But let's go back to triple Q right now. Do the same thing, trade options. We're going to sell puts. And again, it's red because triple Q has also been going up all day long for the past, and also for the past few days. So these premiums have been going down. But let's say I want to play it safe initially. So I want to only buy options that have a chance of profit of 80% or more. Most people will say start at 70 to 75%, but I want to play it extra safe. So that would give us this 194 strike price, okay? So what I would do is I would click this. So right now, I would collect a premium of $79 immediately. And since I have $25,000 in my account, if I could assign these shares, I would only have to pay $19,400. So I could more than cover buying those shares, but I can only afford one contract. So what you do, you would click yes, you would click continue, you'd say you wanted one contract, which is 100 shares, and it's going to give you a limit price of about 80 cents per share, which times 100 would be $80. So you can see the minimum credit is $80. So I'd want to review that order, and then if I'm okay with it, I would go ahead and put it through. So what that means is I would collect $80 or $81 right now, and then if by tomorrow, since today's April 8th and this expires April 9th, if triple Q does not get to 194 or less, meaning if it doesn't drop about $4 to $5 or more by tomorrow, by end of day tomorrow, then I get to keep my $80, and I can do this again next week with another stock or with the same stock. So let's just hypothetically do that now, and I'll check in with you tomorrow to see how we did. Thanks for following along.